Along with the RBI minutes that were released on Friday, the central bank has also announced that it will inject liquidity through a $10 billion buy-sell swap. Latha is joining in to explain how this works. Latha, good morning.
Well, what does the buy-sell swap mean? What the Reserve Bank is going to do is it is going to buy $10 billion on March 4th from the market. When you buy those dollars, what is $1? 87 rupees. So you're putting in 87,000 crores of rupee liquidity into the system. Now, if you don't want to buy, you don't want to create so much of a demand for dollars by buying 10 billion. So the Reserve Bank immediately, back to back, does a sell-buy swap. That is, it sells the dollars to a counterparty with a promise to buy it back 3 years later in 2028. Now, you'll wonder, why would anyone want to do that? Last time when the RBI did it, there were companies like Reliance, Bharti, who were willing to be the counterparty. They want to buy dollars and, buy some 5G equipment. 3 years later, they're ready to return the money to Reserve Bank. So that's how the system works. For the Reserve Bank and for the market, what is the net impact? No impact on dollar demand because it is bought and immediately sold. But 87,000 crores enters the system. Enough rupee liquidity. Now, why would you want to put so much money? The reasons are that the calculation of bond dealers is about 1 trillion is going to leave in the month of, remaining February and March. It will leave the system. Why will it leave? Because you and I will withdraw cash. That is one. A second reason is CRR. Every time a loan and a deposit is created, 4% of that has to be kept as cash. So that cash comes out of the system, and Reserve Bank is going to continue to intervene in the market. Every time it sells dollars to slow down the depreciation of the rupee, it's going to pull out rupees. So this 1 trillion is what the Reserve Bank is replacing in advance on March 4th. That money will enter the system. It is important to note that money will go out even on March 15th. A lot of money will go out because people will pay advance taxes. But that is short term because the government will spend it by the end of the month. They will pay salaries, contracts, end of the year. There are lots of things to pay out. That will be managed by the Reserve Bank by the daily repo that it does. The liquidity problem is expected to continue and finally really end in May, when the Reserve Bank will give a big dividend to the government. That's pure money printing. And the estimate of the market is some 2.5 to 3 lakh crore will be given as dividend. So until then, we will have these band-aids done by the Reserve Bank to resolve the liquidity deficit.
Latha, thanks a lot for that explanation.